Australian dollar continues to fall. Do you see a floor taking place at any point for the currency?
Well, at this point, it really depends on what happens to commodity prices. The Australian dollar has depreciated quite sharply over the past year or two because of the sharp decline we've seen in iron ore and also coal prices. So if we continue to see a decline, then yes, you'll see a further decline. And also there's also expectations of a stronger US dollar going into the second half of this year and early next year that will also continue to push the Australian dollar.
We've all been digging around for an answer though in the mining stocks. The measures they've taken have been fairly extraordinary for the sector. The cutbacks, large-scale cutbacks, BHP Billiton, Rio Tinto, for instance. If you take a look at their strategic plans, is it enough to try and provide a floor in commodity prices, or are there other factors here at play?
Well, at the moment, there's clearly some oversupply, especially in iron ore, where a lot of the big producers around the world have done a lot of investment over the past few years, and all that investment is starting to produce all at the same time, and they all start to export at the same time on the global market, and that has been pushing prices lower. The question also is what happens to China. There's also the slowdown in China is also putting some downward pressure on commodities.
Is there a scenario where the Australian dollar can stabilise if interest rates don't move low? I mean, the expectation seems to be that if commodity prices fall, then the Australian economy needs more stimulus, which means you bring down the interest rate a bit further, 1.75%, some of the forecasts I've seen, for instance. But could there be a position where commodity prices fall, yet the RBA doesn't move on interest rates because of the stimulus it would provide to the housing market, therefore providing a floor for the Australian dollar?
Well, it is obviously one of the risks and one of the reasons why the RBA has been a bit more concerned of continuing the easing pattern at this point. And you can clearly see from comments from the RBA, they're not in any rush at this point to cut rates again. We expect them to cut rates again in November, but it's more that the balance between domestic growth and foreign growth will mean that the economy will be relatively weak, and they will have to react to that.
So if you can make a strong call on the commodity currencies right now, because we were doing some charting after the show yesterday and we're saying this is like a once in 10-year opportunity. Yeah. If you think that there's going to be a snapback in some of these trades, then there could be a lot of money to be made on the trade, or it could be a complete value trap where you lose more because the currencies continue to slide. Which way is it?
Over the next year, it's still down. There's a clear pattern there. For Australian dollar, you have an easier monetary policy going forward. You also have a stronger US dollar expected as the Fed start hiking rates later this year. And then same with the Kiwi dollar and the Canadian dollar. They're linked to the commodity prices, are all suggesting that they should move lower in the next few years.